Hello, everybody. Good morning, good afternoon, depending on where you are. I am currently in Sonoma, California. The All-Star Charts crew is putting on our Portfolio Accelerator event. I'm actually playing hooky from that event right now. The event is underway. We're in meetings. I snuck out so I can hang out with you guys. I know that some of you, I told you we'd be doing this tomorrow. There's been some changes in plans, but here we are. I felt like it was important to talk today. Wanted to get this out of the way. Didn't want you to have to wait till tomorrow. So let's get into it. But before we get into any charts, of course, I have to drop the old disclaimer, as always, that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something from following my process. All right, let's look at the charts here. I'm actually going to start with the VIX chart here. I feel like the VIX is really what's telling the story in the market right now. You can see VIX is trading at levels we haven't seen. This is a one-year chart, but these are actually the lowest levels since pre-COVID. That's pretty significant. And it's being reflected in options premiums. If you're a short seller of options premium right now, you're not getting a whole lot to do it. You're taking more risk than you think. And it just makes that a tough game. But if you're looking to get long, you're looking to take some directional bets, generally speaking, buying options in an environment like this can be very advantageous. But that's where the VIX is at right now. We've come a long way in the last, let's call it month and a half from when we had this little mini spike here in mid-April. I guess that's a month ago. Boy, the picture has changed quite a bit. I'll just bring up a S&P chart right here. No surprise too, right? Because the S&P is making highs. We printed intraday a new high this morning. Are we gonna come back? Who knows? Who knows? Yesterday we had the Federal Reserve. We had the NVIDIA earnings. NVIDIA is up again today. No surprise, and that's been driving the indexes, especially the Nasdaq. But let's get into action that we've had since we last spoke, things that we need to talk about in no particular order. EGO, this is Eldorado Gold. This is a long calls position that we got into back in about March 15th. We bought the September 15 calls. Stock has done pretty well for us. It looked like we were going to get there earlier in mid-April, then we kind of pulled back. But earlier this week, we were able to sell half of our position at our target as we laid out in the plan that we laid out when we put this trade on. We wanted to sell half of our position if it got to 1650, which it did on the 20th. That was Monday, I believe. And I sold half of my position. I got 260 for it. So the nice thing is I've already locked in gains. The worst that can happen here is I walk away with a small win. Hopefully, this will turn into a much larger win. But we've locked in at least a small gain. Where I come from, we call this a free ride. We're now free riding on the rest of this position. Hashtag free ride. So that's good news. All right, let's go to FCX next. This was a trade that we closed for profit. Wasn't the profit we were looking for. This was a call calendar spread that we got into back in early April. We bought the May-January 55 strike call calendar that we paid $365 for. This is the day we entered. Back here when we had a little rollover back to our original entry price, we were able to roll our May calls into June. These are the short calls of the calendar spread. We were able to roll them into June to bring in an additional 45-cent credit. So we paid $365 on day one. We got 45 cents back on that roll. That means our net debit in this trade was $320, doing that math. And then our plan was if it got to 55 while we were still holding short calls, which in this case we were, then we would close the entire position down, whatever position we had on. We would close that position down and book the profit, whatever it was, because once we got above 55, if this thing were to keep going above 55 and keep breaking out, our position actually was at risk of losing money at that point because a call calendar spread has its peak value at the strikes, and our strikes were the 55 strikes. So when we got to 55, we closed the whole spread down. We got 485 for it. Remember, our net debit on the trade was 320. We got out at 485. So, hey, it's a nice win. Not the win we were hoping for. I would have loved to have a big win here, have the short calls expire worthless and then have this thing rip. But, hey, we'll take it. We'll take it. All right, next up, let's rip the Band-Aid off here. Let's talk about a couple bad trades that didn't work for us. Wayfair, this was in and out quick. And you know what? I would much rather lose quickly than sit in a losing trade for weeks and months. That's no fun. But we got into a December vertical call spread, or a bull call spread. We bought the 75 calls and shorted the 105 calls. All in, it cost us $9. We got stopped out below our stop loss level. 68 was our stop loss level. We closed it on the next day. We sold it for right there, 650. So not a terrible loss, right? We size these positions such that if we were to take a full 100% loss, we can weather that storm. But obviously, I don't want to take a 100% loss if I can avoid it. In this case, getting out of 650, nothing but a flesh wound, as they say. All right, more bad news. Let's talk about DJT. This was our YOLO trade, trying to ride the meme stock wave into November. Well, that meme stock little blip on the radar we had a couple weeks ago with GameStop and Roaring Kitty and all that shit, getting everybody riled up again. Yeah, maybe it was short-lived this time. And I don't know if the Donald Trump thing is riding that similar wave, but when we were had this big green candle here on the day we got in, this really felt like it was about to run. But we got to stick to our plan. And my plan was, if the spread lost half of its value or more, then I was going to just close the trade and protect what's left of my capital. And I did that. We paid $5 to get in. And yesterday it was trading. The spread was trading. It was all over the place, but it was definitely trading below 250. I put a limit order to get out of 250. I got it. So I am out of the, what is this? Trump Media and Technology Group. All right. So that's it for at least the bad news on the exits. Let's talk a couple trades, or talk about one trade that did really well. ADI, we're still in it. We're long calls. We're long the December 240 calls. We actually got into this not too long ago, just a couple of weeks ago, May 7th or May 8th, I believe is when we got on. We all have already had a chance to sell half of our position at a double, which was our plan when we laid this trade out, when we put the trade out. We wanted to sell half if we got a double. We got it. And the nice thing about this ADI trade, there were two reasons why we got into it. One, we liked the setup, right? That's usually first and foremost. We liked the setup, but I also liked the trade because it was a nice hedge against our NVIDIA iron condor, right? We had a delta neutral trade on in NVIDIA. We still have a delta neutral trade on in NVIDIA. And with earnings coming up that happened yesterday, I knew that there was risk to the upside, especially the way the stock had been trading. And so putting on this ADI trade, which is also a semiconductor name, felt like a nice hedge, and it's doing its job, right? We're sitting in some nice open profits in ADI. And if NVIDIA keeps going higher in our face, so to speak, well, I think ADI will as well. That's going to be a nice hedge. So let's bring up that NVIDIA. So today, following earnings, we are up above our risk management level. Now, this is not a time to freak out because we have two things going for us. Number one, now that the earnings are out of the way, options premiums are now collapsing. So there's less juice in there, which is great because we're short premium, right? We want premium to come down. So that's happening. Also, we're short the 111 calls. The 111 calls, and we're protected with 1120 calls. So yes, we're above our risk management level, but our calls are still out of the money. That's a good place to be. All right. If we see any kind of reversal in NVIDIA between now and the end of the trading day, we still have a few hours left. If we see any kind of reversal, it's possible we might still get out at our profit target today. We sold this iron condor for 270, a 270 credit. I've got a resting order to buy it back to close it for $1.35, which is half of what I sold it for. If we get that, we could get it. If NVIDIA rolls over today, if it closes on the lows, it's possible that we'll hit our profit target. But the real good news is that we're going to wait to see where it closes, right? If we're still in this position at the end of the day, if NVIDIA closes above $1,000 a share, which looks like it will, well, then tomorrow morning, assuming it's still above 1,000, I'm going to get out of this trade, book my loss, although it might not be a loss. It might not be a loss. There's still hope here. I'm holding out hope. And you know what gives me the strength to hold out the hope is that this is a defined risk trade. I know the most I could lose, right? This is a $20 wide spread that I collected 274. The most I could lose is 18. I don't want to lose 18 or 17. I don't want to lose that, right? But I'm comfortable if that happens. But more, the likelihood here is that we're going to take a small loss, and all things considered, not bad. I also wanted to bring to your attention this IAG. We're still in this trade. It flirted intraday yesterday. It traded below our stop loss level, but then it rallied at the close and closed just above our stop. Our stop is 4. I think it closed at 401 yesterday. So technically, it still lived to fight another day. Well, today, once again, we are below our risk management level. And if it closes below $4 today, then good chance I'll be exiting tomorrow morning. The good news here is that look at the expiration date on these calls, January 2026, right? That's 2 years, almost 2 years until expiration. So why is that good news? That's good news because these calls haven't really lost a whole lot of money because there's so much time to expiration. Even though we're below our stop loss level, we're not going to suffer a really large loss here. There's just not a whole lot of gamma. Gamma affects the speed of the movement of the value of the options. There's not a lot of gamma here because of the long time to expiration. So the good news is if we have to exit tomorrow, it's not going to be a really bad loss. So that's good news. All right, let's quickly review our updated stops. We have a few to talk about in no particular order. APH, this trade just keeps working for us. This one is turning into our best trade of the year. And it's just showing no signs of stopping. We bought the July 120 calls for $1.60 debit back in late February. We sold half, as was our plan. You can see this level here. Once we got to 129, the plan was we wanted to sell half of our position. I did that, and I got $13.75 for that half. These are calls that I paid $1.60 for, right? I paid $1.60 for them, got out of half of them for $13.75. This is a big win for us. And it's still going. We still have half of the position on. We got profits locked in, no doubt about it. But there's more profits to be had, it looks like, if this thing keeps rallying. And these are July options. So, you know, we got another 6 weeks perhaps to enjoy a ride of this thing. Let's go, APH. We already talked about ADI. Oh, wait, I didn't mention that we updated our stop now. Our stop is 129 for APH. All right. 129 is the new stop. All right, next up, ADI. We already talked about ADI as the hedge for NVIDIA, and it's a trade that's working out for us. And we sold half, like we said, but I'm also moving my stop now to 219, just above this, just above this previous resistance there. 219. As long as ADI stays above 219, then I feel good in this trade, and I'll keep riding it. Again, we've locked in. We've recaptured our cost basis in this trade. So the worst case scenario is this position rolls over and we walk away a net scratch, right? No loss. So we can't lose in this trade. Hopefully we can win. All right, next updated stop is in JD.com. We're long a September bull call spread. We're moving our stop now to 29, which corresponds with the rising 50-day moving average. We don't want to see JD lose the 50-day moving average. That would not be good for us. That would also mean it's filling this gap that happened soon after we got into the trade. So 29 is our new stop in JD. And finally, SE. This is C Limited. This is a trade we've been in for a while now, early February. Risk reversal. We've already covered the short puts. All we have now is half of our long call position, but it's working really well. This is another really nice winner for us. We are moving our stop now to 63, which corresponds to this little pullback here before the most recent run. 63 is our new stop in C Limited. Now, next up, I'm just going to briefly touch on some new trades that we've put on since we last spoke. In no particular order, AZN, AstraZeneca. I don't have the details for the trades here. If you want the details of each trade, if you want to see the detailed trade plan of why we got in, what strategy we're using, where our stops are, how we're taking profits, if at all of that is laid out on the blog posts. If you haven't seen them, go to allstarcharts.com and head to the members section and head to the options section, and you'll find all the detailed trading plans there. But real quickly, we've put on a bullish trade in AstraZeneca. We've put a bullish trade on Bank of America, BAC. And lastly, just yesterday, we put a bullish trade on Uber. We're doing a little tactical bounce bet here. We're thinking that Uber is going to dig in, or at least my analysts think that Uber is about to dig in right here. So we're making a short-term tactical bet, something we don't do a whole lot, but the conditions feel right. So we have a quick little trade here on Uber. All right. I know you guys love this, so I just have prepared this slide for you guys. You can pause the video if you need to. Just to recap, these are the updated stops in APH, ADI, JD, and C Limited. That's all I got for you guys. I got to get back to the meeting. I'm supposed to give a presentation in a little bit. So they're waiting on me. So, hey, if you have any questions about what you've seen here, shoot me an email, info@allstarcharts.com. Or if you want to get access to All-Star options, if you don't already have it, send us an email. We'll get you hooked up. And hey, maybe we'll see you at our next Portfolio Accelerator event. We're having a great time here in Sonoma. We'll be in Chicago in September, my old stomping grounds. So I'm looking forward to that. Anyway, have a great rest of your week. I'll be back home in Colorado next week, everything back to normal. Until then, have a great weekend, and we'll talk next week. Bye-bye.